Gold hitting records this week. Is it a top? Is there more upside ahead? Sounds like a good time for a bull-bear battle on gold. Our gold bull, Jerry Castellini, President and CIO of CastleArk Mgmt, and our gold bear, Robert Prechter, President of Elliott Wave International. So, Jerry, would you still be advising widows and orphans to join the great pyramid selling scheme, buy gold in the hope that others will follow you and push the price still higher?
Well, I would say it's getting pretty late in the argument against gold. The fact that we're breaking out here is one good piece of evidence of where we could probably end up over the next 4 or 5 years. Whether you buy it today, whether you buy it in 6 months, I think the case is overwhelming at this point with the issues that face both Europe and the United States in terms of their indebtedness. I think it's pretty clear that as a diversifier, gold has become more and more credible and less of a, quote, gold bug type of investment vehicle. It is more now something that should be considered with all commodities, quite frankly, as part of a diversified portfolio.
Is he right, Robert?
Well, I'd like to look at two aspects of technical analysis that I think we can focus on very quickly to get a good message here. I don't know if you've got my charts ready, but I brought a couple of charts along. The first one I'd like to show is one that shows the sentiment picture, in other words, the psychological background in the gold market. You can look back at 1999 and 2001. Back then, the outfit that does our daily polling, which is tradefutures.com, showed only 5% bulls. That was down at the low. We've had a nice, beautiful 9-year rally in gold ever since, and now we've been bumping up against these highs where we're seeing readings of 97% and 98% bulls. To realize how extreme that number is, 98% is the kind of reading we saw at the stock market low last year in March of 2009. That has led to an 80% move. It's the same kind of reading we saw in silver in March of 2008, and silver has not met that price since. So this is a very extreme number. It tends to happen days or even weeks before the high, so I'm not saying this is necessarily the top, but it's an extreme reading. We've had a cornucopia of them over the past couple of years. Stock market top in 07, stock market bottom last year, and the dollar in the fall of last year, which was the same level, 98% bears and a great buy. So I think there's some risk here. Just
bottom line it for us. If you just explain that, if you would, in one punch.
Well, there's two aspects to this, and I would like to get to the next chart because the sentiment picture is extreme, I mean historically extreme, and it's been just as these other markets were at their turns in the last 3 years. But going along with that, we can also see that gold is losing upside momentum. It had extreme upside momentum in 2006, less at the high in 08, less at the high last year in late 09, and even less now. So you've got a background of slowing upside move against extreme positive sentiment and many, many reasons to own it, which were completely absent in early 2001 when it was a buy.
All right. Final quick question to you, Jerry. Fight back on this one. There's an ATM machine in Frankfurt, and now there's one in the Emirates Palace in Abu Dhabi. All right, so you put in cash, and it gives you gold.
Yes.
Now, I mean, maybe I'm being a little too simplistic here, but that seems to me to be sort of, if there's a bubble, that would be something you'd see if it was a bubble.
Well, unless you think there's going to be more than two. I mean, that's a nice beginning. The reality is, if you have a currency that you're fearful that your country's going to print more and more of, you don't have a lot of options. You either take that colored paper and turn it into a colored metal, or you sit and watch your currency be debased. And boy, it's just hard to see now where we stand.
It didn't work, though, did it, through the 80s and the 90s? It was a lousy currency hedge. Gold isn't a store of value. It's a nonsense.
Oh.
Well, we'll take that on in a different segment.
I look forward to it.
You need to diversify, though.
I look forward. Gentlemen, unfortunately, we have to leave it there. Thank you both very much.